Welcome back to Liberty and Finance. We're always delighted to have this widely followed returning guest who is on a blinding streak of podcasts today. I believe this is his seventh podcast today. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us this Wednesday, October 23rd, 2024. Andy, thank you for coming back and joining us again here on Liberty and Finance for this weekly market update.
You got it, my man. I wouldn't miss it even for 7 podcasts in a day. It's my pleasure to be here. I always look forward to it.
I remember Rush Limbaugh saying he was doing his radio show with half his brain time behind his back just to make it fair. So I'm assuming that you've got enough of yours with us to
Let's
keep us
hope
on
so.
our toes.
Yeah,
So,
let's hope so. Let's hope so. But you know what? It's a labor of love. It truly is. And
well, we just lost you, Andy. We don't have your audio all of a sudden.
see,
Something
there you
changed. There you
go. There
go.
you go. So that's the brain. That's the half a brain part. Well, at least
Okay.
I got half of it working. I
Don't touch your
figured.
microphone. Okay. One of the things we wanted to absolutely talk with you about is the breaking story over the weekend, which interestingly happened over the weekend and interestingly has been terribly undercovered on the mainstream financial press, although Wall Street Journal did put out a brief blurb about it. And it's about an Oklahoma bank that failed and got put into receivership under the FDIC, and they've got plans for how they're going to provide continuity of service to their depositors. But any depositors that had deposits larger than the FDIC insurance limit are in for a rude surprise. And that was the point of the Wall Street Journal article. We want to get your take on that because you did a really smash up job talking about that just recently. And I want to draw it back to what happened earlier last year with the failure of the three banks and the grilling that Janet Yellen got in front of congressional testimony, especially from a representative from Oklahoma about are they going to. So it's very revealing. We've got to slow down and look at these things one thing at a time. But can you first tell our viewers and subscribers what just happened over the weekend and what the fallout is going to be for those who were depositors in this bank?
Yeah, you framed it perfectly, Dunnigan. And before I do that, I'm just going to kind of touch on what you just said. I mean, how many times on your show have I talked about bail-ins and money market gating? 2 weeks ago, we talked about money market gating and your experience in that. And the Dodd-Frank Act after the '08 crisis addressed money market issues as everyone was yanking their money out of Lehman Brothers as they were failing, destabilizing the money markets. And let's remember that there's 7 trillion or just under in the money markets right now. It's not just all John Q public. It's not us. It's half of that money or more is institutional pension funds and insurance companies and whatnot. And this is why they impose money market gating in the Dodd-Frank Act, because it will, if the buck were broken and the money market went upside down, it would blow up a lot of things, not just our pocketbooks, but pensions and insurance companies and all of these things that have over the last 2 years left the banking industry in search of yield. So at the same time, of course, they wrote in money market, or excuse me, bail-in legislation. And when it originally happened, and when you and I were talking about it at least 20 times, it was phrased in or kind of framed in the light, well, why would they write it into law if it wasn't ever going to happen? So when Silicon Valley Bank and Signature Bank failed, banks that held Oprah Winfrey's money and all the tech startups and hundreds of millions in uninsured deposits, the senator from Oklahoma was furious, and rightfully so, when he was questioning Janet Yellen in the House inquiry. Madam Secretary, you just bailed out these banks. What the heck? That's illegal. Yes, sir, it is. You're right, Senator, but it was an uber majority vote, as she says, from the FDIC, the FOMC, which is the Federal Reserve, myself, and the president. We deemed that they were too systemic and they needed to be bailed out. Of course, it won't come at the expense of the public. Yeah, right. The FDIC will handle it. And we've talked about the FDIC's lack of coverage, roughly 7 cents on the dollar, 148 billion backing 18 trillion. Well, that's not a good recipe. But anyways, the banks that have been bailed out subsequently, or that have failed, I should say, they haven't been bailed out, but they've been consolidated, as we've been told by Jerome Powell we could expect to see. Crumbs that they drop, little crumbs. There's a crumb. Yeah, they're gonna consolidate. That's a nice way of saying they're banks that are going to collapse, and other larger regional banks or JP Morgan, those kind of banks, will assume their position. And that's what's happened so far. So this has not really been noticed. Not only do most people have no idea even sophisticated people, have no idea what bail-in legislation is. They have no idea what money market gating is. When there have been banking problems, and let's remember, we added 14,000 clients in 45 days, the panic that was the banking problem, and yet it was brushed over, glossed over by the Fed coming in or the FDIC and bailing everyone out, right? Everyone was made whole. Of course, it's a bank. We've been putting money in our piggy bank since we were little kids. The bank is safe. Putting it into an investment isn't safe, but a bank is safe, right? Well, the Dodd-Frank says you are an unsecured general creditor, i.e. last to be paid. So let's talk about the First National Bank of Lindsay, Oklahoma. And I'm going to read a couple things to you so that people really understand it. For those who haven't heard this or haven't heard me talk about it last night or earlier today, Friday, the First National Bank of Lindsay was closed by the Office of the Comptroller of Currency, with the Federal Deposit Insurance Company, the FDIC, appointed as receiver. The OCC acted after identifying false and deceptive bank records and other information suggesting fraud that revealed deception of the bank's capital. The OCC also found that the bank was in an unsafe and unsound condition to transact business, and that the bank's assets were less than its obligations to its creditors and others. Now, let's just highlight that. I want people to remember what I just said there, that their assets were less than its obligations to its creditors and others. So highlight that and remember that for a moment. The OCC is referring the matter to the U.S. Department of Justice, which has a wide variety of tools to hold individuals accountable for criminal acts and focuses on victims in all of its matters. Okay, that's good. To protect depositors, the FDIC has entered into a purchase and assumption agreement with the First Bank and Trust Company based in Duncan, Oklahoma, which will assume the insured deposits of the failed bank. Now, this bank has 7 million. It's a small bank, only 7 million in uninsured deposits, right? Anything over the FDIC limit, 7 million. Not a big bank like Silicon, which had hundreds of millions. This has 7 million. So the sole office of the First National Bank of Lindsay will reopen as a branch of First Bank and Trust Company during its normal business hours on Monday, October 21st, just a couple of days ago. All depositors of the closed bank will automatically become depositors of First Bank and Trust Company, and their insured deposits will continue to be covered by the FDIC. Okay, that's good. And customers are not required to change their banking relationship to main deposit insurance coverage. All of this is good so far until for uninsured depositors, $7 million in uninsured deposits in this small town in Oklahoma. Ironic that it was the senator from Oklahoma that was grilling Janet Yellen. The FDIC has announced it will make 50% of those funds available. That's 3.5 million of the 7 million to depositors starting Monday, October 21st. Now, here's the kicker and what you mentioned in the onset, with the possibility of increasing that amount as assets from the failed bank are sold. Now remember, the assets are less than the liabilities. So when they sell whatever assets they are. Now, I was doing an interview with David Morgan today and talking about this. And he said, Andy, let me stop you. He says, I've been studying this stuff for a long time, and you're right. And what happens is that extra money, they're not going to get it if they are going to get it at all. By the way, it's 4 years they have, up to 4 years to receive this money, as you and I have talked about before. But he said, it's my understanding that these people who have been affected will receive shares of the new First Bank of Duncan or whatever it is here. And so they're not going to get cash back. They'll get shares of a new bank. This is an eye-opening experience. And in essence, you have $1 million in the bank. You're going to buy a new home. You're building a new home. You're under contract. It fails. You get your 250. Okay. And in this case, because it's a small bank and there's only 7 million uninsured, of that million, you're getting 50% back right away. So that 750,000 is uninsured. You're going to get 375 plus your 250 is 6.25. That other 375, bye-bye. You ain't getting it. And you might get some shares, maybe possibly, as the thing says, over the next 4 years. Now, my question to you is, where is journalistic integrity? Where are the reporters? Where's 60 Minutes? Where's 2020? Where is the outcry? Where is this? Why is this not on the front page of anything that is news or on the opening of any news story? Why isn't it all over CNN and Fox News and Bloomberg? It's a joke. And it's a trial balloon. Look, this happened. It was public information. Didn't you see it happened in Lindsay? So All that it will take is for a bank to be bailed in, a big bank, really bailed in, and maybe they don't even get the 50%, or a money market gating environment to trigger craziness. I would like to add one last piece to this before I take any questions or comments from you. Um, when Silicon and Signature failed, remember they issued the BTFP, the Bank Term Funding Program, and that was a 1-year loan with onerous terms. They had to post collateral mark to market at about 5% interest. And if you look at what the liquidity in the banking system looked like right before they started that, they put that money in because things were collapsing as liquidity was drying up. Bill Holter always talks about this environment being one of a potential liquidity crisis.
Mm-hmm.
Well, it looks exactly like it did in 2019, right before the repo market blew up, and exactly like what it looked like in 2020 when the stock market blew up. And that's exactly what it looked like when those banks failed, a liquidity crisis. So they injected all this money. Now, guess what day the BTFP is set to be drained to zero? All of the loans must be paid back. You have a guess what day that is?
I think it's the day before the election,
It'd be the day after the
the
election.
day after the election.
And so you want to talk about a rug pull. If they really wanted to pull the rug and set Trump up for this kind of, if he wins or whoever wins, maybe if it's Trump, maybe they like it, maybe they extend it, or maybe not. Maybe in the midst of craziness, in terms of half the country being beside themselves, and what we've seen over the last few years is any indication of what we could see. It's frightening. Add into it people losing their money. And as Gerald Celente often says, when people lose everything, they lose it. So, you got 5 million in the bank and all you get back is 250,000. Are you going to lose it? I think a lot of people would. I think people need to be made aware of this. And the fact that this isn't front and center, then again, it is absolutely mystifying to me. So anyways, that's what I wanted to start this conversation with, because this is a bail-in. I mean, I don't know what else it is for them to say you might or possibly get that other half back once they liquidate the bank. We have up to 4 years, and by the way, those assets are already less than the liabilities. So I don't know. It's a scary thought experiment.
Well, I'd like to underscore one thing that you described when Janet Yellen was being interrogated by the Oklahoma congressional representative, and he said, "Are you going to do for our community banks in Oklahoma what you did for these 3 banks in Silicon Valley?" And she said, "Well, we did it for these as an exception because they were systemically important." That's half of the truth. It's not the whole truth. The whole truth that she didn't say out loud, the quiet part that she didn't say out loud, is the banking system is balanced on a knife's edge. And if we hadn't done this extraordinary measure, which was against the law of Dodd-Frank, the system would have been at risk. The whole banking system, the entire banking system is at systemic risk. And we had to do an extreme measure to prevent it from failing. That's what she didn't say out loud, which I'm surprised he didn't say. Let me hear if I understand correctly what you're saying, and repeat that back to her in that way. Because that's why as you pointed out, people just went back to their daily lives after a few weeks there, thought, oh, I guess the sky isn't falling. There were the second, third, and fourth largest bank failures in the history of our country, but the tide is stemmed, the
Everyone got
bleeding
their
is
money
stopped,
back.
and off we
That's
go.
how it always happens. That's exactly right. It's crazy.
And
Now they choose a little itty bitty bank in rural Oklahoma. No one is paying attention, but there's your test balloon right there, your trial balloon.
And that's what I want to make sure everybody who's watching this, and all of our loved ones and all of our family members and our neighbors and our coworkers and our friends understand that your deposits in the bank do not belong to you. They are loans to the bank according to the law. The Dodd-Frank Act of 2010 is the law regarding this. And if a bank gets into trouble, they can, by law, and that must go ahead and tap your deposits for their operating funds. And the FDIC so-called insurance, which is woefully inadequate to cover. I mean, Andy, we talked about that before. It's something like 1% of the liabilities that are being actually covered. It's incapable of covering, and that oh, by the way, when the last 3 banks failed last year, that a study was done that there's like 280 more banks that are at similar or worse condition than those banks were at that time. And then the FDIC actually published a list of like 60 or 70 that were at risk. So it's remarkable that such a feeling of calm and normalcy has returned to most people's expectations of what is going on in the banks, rather than doing everything they can to reduce their exposure to systemic banking risk that Janet Yellen said without saying it when she said we had to do this because they put the system at risk.
Well, one more point. So, what got the banks in trouble last time, right? They loaded up on treasuries at 2%, and then they thought the rates could never go higher. And then the Fed jacks up rates by 500 basis points in a period of a year, right before the banks start to collapse. And now you have all these banks with toxic debt. So, what did the Fed just do a week or two ago? They lowered rates by 50 basis points, right? Have you looked at the 10-year Treasury and the 30-year Treasury? Since they lowered rates by 50 basis points, guess what's up by almost exactly 50 basis points? The 10-year Treasury and the 30-year. It's the opposite of what they had intended, because the world says, no, no, no. Do you think we're going to be that dumb to hold duration bonds? A 10-year and a 30-year bond, and the 10-year is what the mortgages are based off of. You got mortgage rates up again to 7%. It's what the credit cards are based off. With average credit, you're at 24%. With bad credit, you're at 27% on average on the credit cards right now. So the 10-year, which is really the important one, has gone up as much as the rates on the short side of the curve have gone down. And that's the world's way of saying that we don't have an appetite for your debt with any duration at these rates. They have to be much higher. So I find it interesting that is affecting the banks because they have the 10-year Treasury. So again, it further starts to upset the apple cart in terms of the assets that these banks are holding. So as they continue to lower rates, is it going to be 50 basis points? That's what everyone thought. I think the smart money is saying more like 25 basis points now, but who knows? As they continue to lower rates on the front end, signaling inflation over austerity, you're going to have less and less appetite to hold the long end, which leads to monetization, which leads to the only one dumb enough to buy it is the Fed, which leads to hyperinflation, which leads to higher rates. They're trapped. They're trapped, and the world knows it. And the banks are at the center of all of this as they're loaded up with treasury debt. And then you see all the money leaving the banks, making it more unstable, going into the money markets. Well, we got that covered too, because we're going to gate them and they can't get out. So, there's a fine line between conspiracy and reality, Dunnigan, but I mean, this is too stupid to be stupid. The fact that you don't have this as breaking news everywhere, so people can get out of the way of this, is just unconscionable. And you're going to wrap up a lot of good people who never saw it coming, because you can't get out of the way of what you don't see coming. And that's why I even joke all the time, there are a lot of well-read people who just read the wrong stuff that are get hammered by this. And if it can happen in rural Oklahoma, don't think it ain't going to happen in one of these big cities that are loaded up on commercial real estate debt. As commercial real estate starts to literally blow up, that will materially affect one of these banks, that they're going to have so much in unfunded or uninsured rather liabilities. It will bring down the system in a daisy chain as everyone runs to, if a big bank failed, if it was a big one and this happened, a real big one, like a large regional bank, like, US Bank, which isn't a commercial bank, it's a big regional bank. They have to have a lot of uninsured deposits. If that happened, how fast would everyone watching this immediately try to get your money out and buy gold, buy a car, I don't care what you buy, get it out. And that's why I've told people who want to own short-term treasuries, buy it directly through treasurydirect.gov. Get out of the way of the banks. If you have more than 250,000 in any one bank account, you're out of your mind. And this is proof positive of that.
You just used the terminology describing how the Fed cutting rates was not accepted, was seen as a statement of desperation and weakness, not of strength and not of confidence building on the part of the global holders, who are the largest holders of U.S. Treasury bonds, and that those bonds, by selling off, have started to spike in interest rates. Alistair McLeod, whom we interview often on our channel, former bank director, just put out an article just a few hours ago called "Equities Are on the Edge," about how toxic that is going to be for the stock market. He says, while stocks have undoubtedly lost momentum, few bulls notice the rise in bond yields, which, if they continue, will crash equity markets. This is systemically very dangerous. There is a growing air of surrealism in the markets. The S&P 500 is close to an all-time high, yet yields on U.S. Treasuries are rising, with the 10-year note yield having risen 3.62% from 3.62% to 4.234 today. He says if
That's
this
50
continues,
basis points, by
yeah,
the way. That's what
and
they lowered them. You know?
and if he says if this continues, it's going to be it will crash the equity markets, and this is systemically very dangerous. Again, that systemically very dangerous. And now I want to tie one more dot back to this, and that is the World Gold Council survey that we just discussed 2 weeks ago, you and I, where central bankers around the world said why they're considering buying gold and why they think their peers are buying gold right now. And they said they talked about financial crisis and counterparty risk of default by counterparties. So if it's like
More crumbs.
everybody but the financial press notices
More
this
crumbs.
stuff.
Yes, yes. And that's it. The financial press, and even forget the financial press. I mean, how about just the news? Like, like we always used to watch when we were much younger, and you'd come home and around dinner table, you might turn on the evening news back in Minneapolis, you and I, way back when. I mean, watching it should be front and center. There are a lot of people that are going to get really hurt. Imagine if you own a business where you have 5 million bucks in an operating account. I mean, I think about this every day. What are you going to do with that?
Mhm.
So it's a very, very, very concerning time. And these banks are very systemically connected. And if you look at all the crumbs and the admission by the Federal Reserve that this is going to happen, there's going to be consolidations. At what point does a consolidation turn into a bail-in? Here it is. And this is only 7 million. So they're benevolent enough to give the poor peasants 3.5 million, but they bailed out completely Silicon and Signature to the tune of hundreds of millions. It's really a very concerning, frightening thing done again. And I in my heart believe that this is a fuse that was lit, and this is not the end of it. Um, who knows what happens? I don't mean to try and be sensational, but I can't believe that this has happened, and yet no one's really freaking out about it.
You pointed out a few moments ago that the bank term funding program that was put in place to try to patch over the liquidity crisis that was happening, that was drying up Silicon Valley and other banks first quarter of last year, is set to expire the day after the election here. And we have a question here from a viewer in the live chat. Nima says, Andy, we know, and this is their statement, we know all presidents are selected, not elected. Both parties get their marching orders from the Fed, and why does it matter who wins?
Maybe that's part of the plan altogether. If ultimately a resetting of the system is in place, if ultimately they want to issue a central bank digital currency, we've talked about this before. How do you issue a central bank digital currency to a public that doesn't want it? Well, you come in on a white horse with a solution to a massive problem. Yeah, the banks collapsed and the insurance companies collapsed and all of these things happened. So just take the CBDC. That won't ever happen again. The Federal Reserve can never go bankrupt. And take the CBDC, will make you whole. It is a fair point, but if you look at both of the candidates, they're it's almost as if they're singing the Federal Reserve's marching orders. What do they want? They want lower interest rates and a weaker dollar. Well, that's not the solution. In fact, that's the problem. And then you get Trump saying he's going to put 20% tariffs across the board. I think it's better than picking certain countries to put tariffs upon. But all of this stuff is that only incentivizes and crystallizes these countries joining the BRICS to move away from the U.S. Um, you know, I think that both of these candidates are to the point, more or less singing the song that the Federal Reserve wants to be sung. We don't have anyone pushing back against that narrative whatsoever. And I think ultimately the system has to be reset. And maybe this is all part of it, where you reset it by making people very reluctant to trust banks and to want to keep their money in a banking system that can collapse and lose everything. We'll have no fear. Lael Brainerd with their CBDC is here. That'll never happen with the Federal Reserve. So you just take our CBDC and you'll be safe.
We have a comment here by Pamela Flasted, who says, The whole system is toxic. Schools are bankrupt and they're rolling their bonds. The whole system is bankrupt. Let's talk about that for a moment. This idea of zombie companies who are we've had up to 40% estimates, 25 to 40% of the companies on the S&P 500 or the Russell 2000 don't even have enough profits to cover their obligations on their debts, and now the interest rates are rising on their commercial loans. We've got banks carrying bond portfolios and corporate loans that are being marked to par value rather than mark to market. We've got so it's like dead man walking. It's like the whole system seems to be based on has been carved out, hollowed out, is acting as if it's. We've talked for some time about how the governments of the world are spending as like people who are runaway debtors, and they just got extended, unlimited credit cards or whatever. But what's your view of this idea of how vulnerable that puts ordinary people systemically when the corporations, the banks, uh, the insurance companies, the money market funds are all running on acting as if rather than, not acknowledging that these are toxic assets, toxic debts, toxic bond portfolios, toxic corporate loans, et cetera.
Come on, Dunnigan, you're just being tinfoil hat conspiratorialist. That could never happen in this country. Never. And that's the conventional wisdom. But it is happening. And that's why I've had this narrative for a long time that it's too stupid to be stupid, that we are moving towards this moment. When you realize that the entire world's gross domestic product, if you take the countries that comprise 99% of it, they all have a CBDC in development or operation. How do you roll it out? And when you realize that we have crossed the line, really crossed that Rubicon of being, real darn close to 130% debt to GDP, there's never been a country that's come back from it. They either hyperinflate or they default. I think they understand that they're at a crossroads and they need to initiate a new system. And when you talk about all of these dead man walking companies in the Russell 2000, that is the economy. The Russell 2000 is a far better barometer, if you will, of the economy, a much broader selection or a section of a cross section. And if all of these companies in the Russell 2000 are just barely breaking even and really not, well, remember, who owns all the small business loans? Oh, yeah, it's the regional banks. Who owns all the real estate loans? Oh, it's those guys too, the regional banks. And rates are rising on their bond portfolio. Oh my goodness gracious. And what happens when these companies start to default and go bankrupt? Uh-oh. And then a cascading effect happens, and as does the urban doom loop, where you look inside these big cities where you used to have full capacity in office buildings, not so much anymore. And so that revenue is not going to the shops and to the restaurants and the bars and to all of the things that have sprung up around it. So they start to feel the pinch and they leave. Now then you have a vacuum of tax revenue for the municipalities, and you start to see a slowdown in the garbage collection, not quick as response with fire and ambulance and police. People say the quality of life here sucks. Whole Foods just left and Macy's is leaving and Walgreens, I'm out. Let's go back to Minnesota. Well, probably not. Let's go to Florida. And that was a bad one, but let's go to Florida.
Maybe
Okay.
you've seen that video, the satire video that got sent out this week about come and visit Minnesota, and they show you they say all the traditional things that were true about Minnesota when we were growing up there, but they show images from the last 4 years of what's been happening
No, I'd love for you to
there.
send that to me.
I'll
That
send it
will
to
only
you.
reinforce the how smart it was for me to move here. But the point of it is then they start to leave and those businesses fail. And as less revenue comes, the quality of life deteriorates further. So more people leave, more businesses leave. And we're not going to re-up that lease. I mean, we've already proven that we can work from home. Boom. It's just like a systemic chain reaction. Doesn't happen all at once. Well, maybe it does. And this is the little by little and then the all at once. And so when that happens, what happens to the banking system? Poof. That's when you get the bail-ins. That's when you get the money market gating. That's when it becomes a terrifying experience. And who's going to reliquify the system if not? Oh, the Fed can come into the rescue again and add a whole bunch more liquidity. So we just get more and more and more inflation in a slowing economy. stagflation. The point of it is that these are real things. And, a lot of the things that you and I have talked about, I sometimes, when I'm alone and I'm thinking about, man, it's crazy. These things that Dunnigan and I have talked about for 3 years are all coming true. And on one hand, I feel proud that I was stupid enough to go online and say these things and they've happened. I'm like, wow,
Mhm.
maybe I am paying attention. Maybe I got this. But I'll tell you, it's scary as hell right now, because I think this is something I've talked about, but to see it, to see it here even a little bit, 50% of those uninsured deposits, maybe you get them back. That's a bail-in. This is the first one. It's a baby bail-in and an unnoticed bail-in. Let's see what happens as these things start to unfold, as we just talked about. And if this isn't a wake-up call, you'll never be woken up. So I don't know. It's scary to have been right. On one end, it's gratifying that I didn't make a
Hmm.
fool of myself.
Hmm.
On the other end, as an American and as a father, it's very terrifying, to be honest with you. And if you're
Hmm.
not scared right now, you're not paying attention.
We have a comment here from Slump Buster 100. Gentlemen, being an Oklahoma resident, I am hearing crickets from local and statewide news outlets. So
That's just pathetic.
even the people there closest to the ground zero of this bail-in, and I want to put a little bit of meat on the bones of the things you said a couple times about money market failures and money market gating, and the risk, the systemic risk that people are under, because reminding everyone that my wife and I tried to step aside from market exposure following the dot-com collapse. So we moved into a money market fund at our brokerage, which is TD Ameritrade. And and it's called the Reserve Fund. And we got a notice from TD Ameritrade saying, until further notice, your access to the funds in your money market will be unavailable. You will not have access to your funds until further notice. And I called them up and said, there must be some mistake. Oh, and it said due to recent market volatility. This is right after the Lehman Brothers collapse. So we said, no, we're not in the market. We stepped out of the way. We're on this little high and dry island called a money market fund. And they said, well, you were, but your fund was invested in Lehman Brothers on the backside. And you've pointed out that Lehman Brothers was carrying a lot of money market fund paper. And when they went under value, they had their crisis, and a lot of funds got hurt, and we didn't get access to our money for long periods of incremental times, and we never got it all back. And then years later, we're still trying to seek some yield, so we took out a Capital One online credit checking account, giving you some yield when nobody else would give you anything but a tiny fraction of a percent. And then we got this lovely card in the mail. I should have kept it. I did for a while, and it said, for your safety and protection and convenience, Capital One is implementing transfer limits that will be brought into bear at the time and amount of our choosing to make sure that the system remains viable and operating safely and securely for your benefit and comfort and pleasure. And I had all those words in there to tell you your hands are going to be tied. You're not going to be able to escape. When you want your money out, you're not going to be able to get it out, because when we're in trouble, we're going to protect ourselves at your expense. Any comments from you on money
Yeah,
market
I
gating?
got it. Something just popped into my head. Now, you said something to me once that you never got that money back. Is that true?
We got portions and portions and portions, 50% and then 20% and then 10%. We never got it all back. And then every year that one of their managers of the trading desk, whatever, calls up and says, hey, we noticed you're not making as many trades as you used to make in the old days. Is there anything we can do for you? And I said, before we talk about
Pound
that,
sand.
give me my money back. No, I said, give me my money back and then we'll talk. They said, is there anything else we could do for you? So no, that was
I mean, I
16 years
guess
ago.
what popped into my head, I was thinking the Great Taking, David Rogers Webb, where all of these securities are held at the DTCC. And I'm wondering, is that a fraction of the Great Taking? But no, because you got some of it back. But doesn't make sense to me that you didn't get it back. You look at a bank like TD; they've certainly made profits, and well, again, it's a bank that just paid a massive fine to regulators for laundering drug money or
Yeah, but
whatnot.
but 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 TD Ameritrade was the brokerage, okay? We bought shares of this reserve money market fund. So they're not gonna, your broker isn't gonna bail you out if you make an investment that goes belly up. If you buy shares in GM like we did when it was on the ropes and then it crashed completely and the shares became worthless and Obama issued a new class of shares for specialer people than we are, we got zero.
Do you
So no,
remember what
you're
he did then? Do you remember what happened then? For the first time ever, I think The bondholders, which are first in line, became subordinate to, I don't remember who, but the bondholders during that process were actually put to the back of the line. I'll have to read up on that, but that was something that happened that had never happened before. All of these things should just tell people. Here you are thinking you're being smart. Yeah, honey, we're in the money market. We're safe. We're out of harm's way. No, you're really not. And what's scary is that you have record money right now in the money markets, record, huge. And it's just ripe for something like that to happen. So, it's not about being sensationalists. It's not about being an alarmist. It's about if you're not alarmed, you're not paying attention. And that guy in Oklahoma, I mean, that's just crazy. If it ain't on the front page of every newspaper and television show, news show in Oklahoma, then I mean, are we living in bizarro world? These people lost half their money and possibly will get it back after they liquidate the assets of the bank, which probably aren't very many assets. And so that 3.5 million in essence is now going in to bail it out or to bail it in. So whatever is left afterwards, according to David Morgan, you'll get shares of that new bank. Whether you get shares of the new bank or you get a pro rata fashion, a pro rata amount of the money that they use to bail it. If anything, it's not going to make you happy, and it could be 4 years later. So sometime in 2028, you'll be made whole, hopefully.
We wanted to get a chance. I'm going to go to the list here and see what we've got on here. People are asking about what's happening the day after the election, reminding them that's the expiration of the bank term funding program.
Yes.
It was to reliquify the banks during the liquidity crisis a year ago.
So
And
they've been paying, it's been going down and down and down and down as the loans have been paid back. It is set to expire on November 6th, I believe. It'll be at zero.
and a comment here by Beholden XRP. And yet, with the latest bank failure, the FDIC just covered 50% of the covered losses. Is it really insurance at this point? Well, so clearly it's never
Well, those are uninsured deposits. They cover everything that was. But you got to remember, this is a tiny bank. If they only have 7 million in uninsured deposits, this is a small rural bank. I mean, you could have a bank, a big bank that has many, many accounts with large amounts in it that are uninsured, and those numbers would be in spades, and they only are giving 3.5 million of coverage here. That 50% should say we're only covering 3.5 million of the 7, and it would resonate a lot more with people, I think.
Mm-hmm. And Michael Guadano asks, Andy, any relevant news from the BRICS conference?
What I think they're trying to do right now is show the world they got their act in order. You see and again, it's like marketing to the West, in my opinion. There hasn't been a lot of news out yet. On Thursday, they'll start making more announcements, which is the last day. But the three things that stuck out to me was they're showing that they have, that the countries involved are putting aside their differences. It was announced that Saudi Arabia and Iran would take part in joint naval exercises. This is Sunni and Shiite who've hated each other. You remember a year ago, the Chinese, the adult in the room, brokered a peace deal, even going as far as having embassies in each other's countries, but brokered a peace deal between these two countries that have disliked each other for a long time. But now we're in the BRICS, and it's a cooperative union, and we are putting our differences aside for the common good. And today, Modi and Xi Jinping spoke on the sideline. If you remember, back in South Africa, they did the same thing, where they tried to settle their differences of the border dispute. And again, they are saying that that is indeed what they are doing now, and putting their differences aside for the greater good. And they want people to see that here you have countries that have been at each other's throats for years, if not longer, decades or even centuries. And now for the common good, they are putting these differences aside, and it's much easier to be cooperative than be in constant conflict. The other thing is that we've talked ad nauseum about Enbridge, and the unit, which will enable these countries to trade with one another over the cross-border payment system of Enbridge with their local currencies, and it will enable these countries to buy things like oil and other commodities with the unit token, which we have been told by Dalma Rousseff, the head of the New Development Bank, that in principle we've agreed to it. It'll be pegged to gold. But They also have come out, and that's for the big money, the state, and maybe the commercial banks on behalf of the state, but they have issued something called BRICS Pay, which is kind of like, according to Vince Lancy, I think he gave a great analogy of it, a monetary passport, which is that any one of the BRICS member countries can seamlessly purchase goods and services in any BRICS country using BRICS Pay. It seamlessly and immediately converts just using your BRICS Pay card. So they're basically saying we have covered our settlement currency. We've talked a lot about Enbridge, that we're putting our differences aside, that we are getting our house in order, and we are all on the same page. And now we have the ability for the consumer to trade within this ecosystem wherever they are within the BRICS Union. So they're showing cooperation. They are showing the ability to not use the dollar to settle on a large scale and bring it all the way down to a retail level. Those are the things that I've taken away so far. And there hasn't been a lot of news that has come out yet, other than, I think it's a big deal that you see these countries trying to mend fences. In particular, always, well, India and China don't like each other, and Saudi Arabia and Iran hate each other. Well, those are the two news stories they came out with. And maybe there's some legitimacy to it. Maybe it's marketing. I don't know. But if indeed this is what they are accomplishing, it's a huge deal. If for the greater good, you get these countries as allies, yeah, let's just forget about it. I don't remember what we were fighting for, kind of thing. It's a huge deal. It is a trend in motion, and there'll be more clarity by the end. By Friday, there ought to be a lot of stuff to talk about. But as of right now, it's just 2 days in. That's what I've taken away so far.
Wanted to give you a chance to let everyone know before it gets too late in the hour about our weekly specials. So I'm going to bring those up real quick.
Yeah, because I don't know what they are as usual.
Here
Let's
they
see.
come.
Comment on them.
Here we go.
Yeah, 1 ounce Britannias. Things are starting to disappear, Dunnigan. It's finally happening. We've talked about this forever, but I think things are beginning to get tight. So if you're looking for a 1 ounce silver coin that isn't the American Eagle, this is as good of a deal or as good of a price as you'll find on a 1 ounce silver coin that is highly sought after. I like it. I own a bunch myself. And I think here again, we sold out of these, and I'm not mistaken, our trader Matt was able to find a whole bunch more that are coming in. But
Which ones are you talking about? Still the
half
Britannia?
ounce, the half ounce maple leafs. And I think they're almost priced on par with what a 1 ounce maple leaf is. They're really good deal, but there may be a week delay on those. But it just goes to show, things are starting to get hard to get all of a sudden. The 1/10 ounce Eagle is gone. The 1 ounce maple leaf, both backdate and current date, can't get until 2025's come out. And we're starting to see, I think, this start to permeate down, and you'll see it very quickly with the Silver Eagle. We're getting to that point. So yeah, when you realize that in normal times, most of my career, come Halloween to Thanksgiving, the mints stop production of current year. So normally that's when we see a slowdown, even in normal times, of product, coupled with problems with the banks, coupled with the breaks, coupled with the election and all the chaos that is around us. It's eerily quiet. My guess is just when people decide that they really ought to get some gold and silver, it's going to be tough to do so. And I would say that from November on, I'll be shocked if we are not talking about this as our main topic. That product is just really hard to get, and premiums are jacked up again. Because I think it gets nuts after the election, assuming that everything goes smooth before it. Well, I'm not sure about that, but after the election, half the country's pissed off, and if the BTFP is stopped, and we see this liquidity problem, we see banking issues alongside of an angry public, and let your mind wander to where, think of Minneapolis in 2020, and heaven forbid we see that again. But I never thought I'd see that in my hometown, where Little House on the Prairie and Mary Tyler Moore was filmed. We did, and things that you never think can happen seem to happen, and these things seem to be accelerating. So I don't mean to here again sensationalize precious metals, but my guess is that we are entering a period of time where I could say I told you so, and I won't, but I think that's what's going to happen. Product's going to disappear. The mints won't be producing anything till the following year. Nobody is selling anything. I don't care how high the price goes because they don't want to go back into dollars. That higher price reinforces the motivation they used to buy it in the first place. At the same time, the world's getting crazier. And the election. You couldn't ask for a better powder keg for evaporation of supply. So I would say if you're thinking about buying, you've been waiting for the pullback. Today was the pullback. We've seen it go up completely linear for the last, few weeks. This was a fairly healthy pullback. I would act on it if I wanted to get metals. I wouldn't wait for anything more substantive because even if you get a better price, I think you'll have a hard time finding the product to fill that order.
Yeah, that's the three-legged stool when it comes to acquisition that I want people to remember from a preparedness standpoint. One is the spot price. That's what everybody tends to watch is the spot price went up or the spot price went down, and they're waiting for a good pullback, and who wouldn't? We all like a good sale. The two things that we don't have as much visibility on at the customer level are the premiums and the availability. We have visibility on those, and you've been telling us for some time now you saw a bottoming of premiums and a glut of availability in first, second, third quarter of this year. Now we're into fourth quarter, and we've seen premiums start to tick up again. We hit the premiums, for example, on the 1 ounce American Gold Eagles, which had reached like 115, then they were up at 120, 125, 130, 135. We've seen on the American Silver Eagle, the premiums went down to 499 for the Silver Eagles. Now we're up to 5.25, and so on. And when you see that turning of the premiums in the upward direction, it seems, and you tell us, does that indicate a physical supply demand imbalance, and that's not going to likely turn on a dime and go back the other way, but going to continue so that you don't foresee lower premiums or better availability in the near term?
Yeah, it does. And it doesn't come from companies like mine or Money Metals or SD or JM or it doesn't. It comes from the handful of primary distributors, which are the market makers. So if you're a market maker and you're spending hundreds of millions of dollars on product from the UK mint, from the Australian mint, from the US mint, from the Canadian mint, all these mint, and business is normal. If it's slow, they get hammered when the back dates are going for less than the current issues are, and they have to buy the current issues when no one wants them because they can buy cheaper on the back date. So go to a position where, like we've seen over the last several years, where everything's disappearing and the mints are out of product. Sorry, nothing for 2 months for you guys. So the primary distributors say, well, if we're running out of supply and we have more demand than we have supply, better jack up the premium because we're not going to get anything for 2 months. I don't blame them. That's what business is. Well, we have to pass that on at the same time. If we're paying more money to buy them from the primary distributors, for the one or two people that decide to sell, yeah, they'll get a much higher premium on the sell side. Just understand this is not a magic number. This is a number that is based off supply demand in a forward thinking way. Yeah, getting products shut off for a month and a half and things are crazy. Premiums are going to jack up. And when it sells out, good luck getting product because no one goes back into dollars. Why would they? The secondary market becomes absent of any product. The primary distributors are out of product. The mints aren't making anything for 6 weeks. That's how it happens. And, during the pandemic, they were the model of inefficiency. You want to talk conspiracy, I would urge everyone to watch Bixweir's 3-part video with Jack Sermon from the U.S. Mint, where Jack, who developed the Eagle program since '86, said he was told by his superiors to only print as many or mint as many silver eagles as would not create a public outcry. Well, the outcry got so loud, in large part due to all of us yelling in Bix's interview. Who knows what happened to that guy, but he said it, blew me away. He said, the primary distributors came to us the second half of the year, asked for 36 million. We only gave them 12. The law says they have to make as many silver eagles as is demanded by the public. They broke the law willingly, knowingly. Why? Are they stockpiling silver because they know it's strategic, not industrial? Are they stockpiling because they know we've exhausted our own stockpile? But when you hear these things, take off your tinfoil hat. It's not conspiracy anymore. Jack Sermon said it, and he's, the guy that runs the Silver Eagle program. So if mints become inefficient or start doing things in a self-serving manner, if the mints around the world say, you know what, let's take care of our people in Australia and UK and South Africa and Austria instead of sending it to the United States, like that, you can shut the light off on supply, man. And it's true. That's it. That's how fast it happens. And that's why, when I sit here for 6 months telling everyone how cheap everything is and how abundant it is, in the back of my head, I hear people saying, yeah, right. Guy's just trying to talk his book. No, I'm not. And Dunnigan, you've been with me long enough to know that I'm sincere on that. And you've seen both sides of that
Hmm.
coin.
Hmm.
I think the setup is far greater than anything we saw during the pandemic, because the setup right now comes along with an awakening of that elephant. You and I and everyone watching this were the pimple on the elephant's back. The elephant will wake up when a big bank gets bailed in or gated, or something happens that none of us even have on a radar screen, God forbid. But I do think it's the time to realize that this may be the best value that we've had in a long, long time, because who knows what tomorrow brings. And I can't imagine this being a peaceful transition, um, or a peaceful election. I just can't. So I guess we'll see. I hope I'm wrong, but that would translate into difficulty for everyone, including the dealers, getting product at a reasonable rate in a reasonable amount of time.
I'm concerned, not only, well, we're always concerned about all of our viewers, all the families who haven't heard the news, who don't know that they need to protect themselves, making sure that they can get what they need. I've definitely seen in the past week, and I'd be interested in hearing if you're seeing this as well, because I know our viewers often ask us, "What are you guys seeing?" Is a lot of my clients who are able to make larger moves, but have been waiting, getting their ducks in a row, watching things, are now this week, they're just suddenly calling me up and I'm done again. Can you arrange for this? Done again. Can you arrange for that? And it's like, I'm seriously concerned. I had some conversations with some of our buyers today saying, how are we going to handle this size of an order if it happens? And it's actually becoming logistically a challenge just planning the next 2 weeks here. For myself, and I'm one of many, and that it makes me feel that there's a turning of the tide here, that some people are waking up. Some people who've been watching for a long time and waiting are realizing, okay, we're not going to get a complete pullback to way back where I wanted it to, so I can get those prices that I didn't buy back in January, February, or March, or whatever. That this is the train is leaving the station, and I got to get on it, and I got to get myself together, because we know where it's going. The fundamentals are firmly in place. So that's something you've talked about for a long time, is there's no change in the fundamental drivers that are driving the dollar down the drain and driving more risk in the stock market, more risk in the banking, more risk in the bond market, et cetera.
You're just talking your book, Dunnigan. I don't believe you. And that's the point. It's like, no, you're not. And you're as honest as anyone I've ever met in this industry. Um, it's real. It's very real. And you know, we used to talk about, you and I, the little man, and the little man is always last to get the information. I would say a lot of these larger orders that we're experiencing, it used to be and please don't take this the wrong way, all of you, not you, Dunnigan, but everyone listening. We don't have an order minimum. During the pandemic, every online company did. We didn't. And there'll be people that will tell you that I talked with them for a half hour and they wanted to buy 5 ounces of silver. Now, that's not the greatest use of time, you could argue, but I don't care. I mean, I've built a business on treating everyone equally. So this is not saying that we don't want smaller orders. We want every order and help everyone we can. But I will tell you that it used to be you'd get a couple seven-figure orders a year, and we're getting several a week. And I'm not used to that. That to me indicates that um, there are people who have been listening and
Mhm.
acquiescing
Mhm.
to their advisors forever, who are
Mhm.
finally saying, I'm done. I don't care. I've worked my whole life to leave
Mhm.
something to my kids,
Mhm.
and I don't like what I see. I'd rather take my chances, and they're pulling out. I have noticed it, and I look at that as an indicator of what's to come next, because it starts up at the commercial banks, excuse me, the central banks, the top of the food chain in terms of information. They're the most well informed and the most well financed, and it trickles down into people who have more money. For people who had an easier time making money than it is for them at this point to consider keeping it. And I think it's no longer about making money. It's about transitioning, passing it on, safeguarding it. And when you look to what is traditionally safe, like treasuries, or banks, these are people that are paying really close attention, and maybe they have a stronger interest in doing so. And I guess I don't even know how logical it is what I'm saying, other than to say it's something that completely noticed. Very, very big orders coming from, including people who we've done business with before, but many we never have, and trying to take matters into their own hands. So I would say that would be the next thing in line. Would be the public wakes up, but they wake up a little bit too late. This is why so few people ever succeed in investing. Ask Rick Rule. He'll tell you the most money he ever made is when no one wanted to buy the stuff. But he had the information and the intuition and the research and the due diligence to say, no, this is right. And this is why I always say, trust your gut, because the conventional wisdom will always say, no, you don't do that. Gold doesn't pay any interest and blah, 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 yet it's outperformed everything. I think you trust your gut. It's your best financial advisor. And we are in deeply, deeply submerged in uncharted waters. There is nothing like you can use to as precedent to where we are. There's similarities, but nothing like where we are. So act on your gut. Don't be that person that says, damn it, I knew I should have done that. I just let it slip by. Why didn't I do it? He talked me out of it. She talked me out of it. Just, trust your gut.
And the one more aspect of that in addition to your retail financial advisor who has had a 40-year track record of just buy and hold, buy the dip, and that's all you need, that is not the regime that we're in for the next 40 years. It's not the regime we're in now. And
So I agree. And because this is why, that right there, that's what the interest rates look like over the last 40 years, straight down. So anything that is traditional, stocks, bonds, real estate, you look like a freaking genius because interest rates fell and everything went higher. You change that, flip that narrative, and all of a sudden, just as bullish as easy money and manipulated interest rates were to asset prices that are now way out of whack, inversely, you can expect that to be just as devastating and maybe more so because of all of the money that has been created and continues to be created every single day. And so much of this money, where's it gone into? Into assets. And someday, those people who have made all sorts of money that get out first, that they want to buy more stuff, well, that's going to translate into much higher inflation for the people down below that haven't witnessed their assets rise because they don't have much in the way of assets. And now it's just much higher inflation in terms of price inflation. And that's coming too. So none of this is a rosy picture. I wouldn't invite me to a party if I knew I was going to talk about this. That's why I find it cathartic to do all these 7 podcasts in a day. I can get it out of my system and puke it all out so that I don't have to be this person, the buzzkill on the golf course or on a Friday night, at the bar talking to my friends. I can talk about life instead of dwelling upon what's coming. They all know what I do. They want my help, I'll give it to them. I'm easy to find on YouTube, but again, we represent such a small minority, and that's why I think things will get exponentially crazier because this time there's something to be concerned about. In all the years before, yeah, everything was still great in this country. This time there is a foundation of insanity that I think when you talk about a crisis, an economic crisis, and you add into it the powder keg of social problems, like we're seeing, and half the country angry, and a massive immigration problem, and all of these things where there's lawlessness and craziness already. That's why Salente says when people lose everything, they lose it. I hope we don't see that, but I don't see how we avoid it. At some point, the bar tab has to be paid. At some point, Mother Nature has to be made whole. And it just seems to me that we're getting closer to that than we've ever been, ever. You've never been afraid to go walk home from a ball game in an inner city, a big city like Philadelphia, like Minneapolis, like Chicago, like New York, and you're not doing that anymore. You're out of your mind. You're going to walk to your car a mile or a half a mile when it's really dark out in one of these cities. You're not going to be scared. But it never was that way. I used to live in downtown Minneapolis right out of college. I would walk at 1:30 in the morning by myself a mile home without even giving it a second thought. And now, maybe if I had a 9mm handgun in my hand, maybe I would. And I hate to sound that way. I truly do. But to some degree, it's pretty true. and you add into it a massive financial problem, yeah, then the whole thing becomes exacerbated. And maybe that's what they're trying to do. I don't know. But the actions that they've done to lead up to this are fostering that type of malcontent, shall we say.
Well, Andy, we're always grateful for your presence here. Sorry, we need to wrap, and thank you
You
everyone
need
who's
to go
been
have a
in
drink, don't you? I
the live
understand.
stream. Yeah, sure. Yeah, we've had almost 6,000 views. We've got 1,482 concurrent viewers right at the moment, and we're grateful for every single one of you who are here in the live chat. It's true that only about half of our viewers are subscribers. So that means, see, this is the plaque that says we got 100,000 subscribers that YouTube sent us. But that means we got 200,000 viewers out there because only half of our viewers are from subscribers. So if you're not a subscriber of our channel, just click the subscribe button and you'll get notified. Click the little bell and you'll get notified by YouTube. But if you want to make sure you don't miss a single interview with Andy or with any of our guests, make sure you go to libertyandfinance.com, libertyandfinance.com, put your name and your email address, click submit. And you make sure you confirm on the confirming email. You get one email in your inbox per day with our latest interviews and all our weekly specials, including every interview with Andy. You won't miss him a single time. Andy, on behalf of all of our viewers and subscribers, thanks for watching us, for joining us so that we can all watch together here on Liberty and Finance.
The pleasure is absolutely mine, my brother, and I hope you and everyone else out there stays well. You know, the election's in 2 weeks. There's going to be a ton to talk about. So I, for one, will look very forward, as I always said, riding shotgun with you for the next few weeks to see how it transpires. But I'm sure it will be interesting, as the Chinese curse says, may you live in interesting times. I hope you stay well done again and everyone else. And until next time, we'll see you.
Take care, everyone.